Welcome. Here we are, end of the month. T plus one. It's a thing, right? Google it. T plus one settlement. So all the bigs, hedge funds, mutual funds will square their books for month end. Today, not Friday, because you need one day to settle the trade. So we'll be looking to see what, if any, manual intervention there is, if the algorithm will override. What we've got on the left here is a monthly chart. You can see here how the bodies of the candles the last 4 months have gotten progressively smaller. And you can see right now how I've got an alarm going off, and we'll check that out. 59.94. So we've broken 6,000 on the down. On the right is the weekly. So getting back to the monthly on the left, we're at this point here where we want to see if we can make a run for the 5,800s, which was the previous month in January. So let's look at this weekly. One more day of the week going. I've got some lines going. This is a naked chart, but seasonality is still with us, at least until next week, maybe late next week. So I'll be looking for spikes up to fade, no longs for me. And I do expect right now, no Hail Marys. Basically, if you're trading, you want to know when enough is enough. And you should have, if you're looking at the month of February for your ROI, for your payouts, you should have already made it. You should not be looking to do a Hail Mary pass for a touchdown and risk it all. That's just not good money management. Always we want 5-star pristine money management. So you've got the higher time frames here. Let's go into the nitty-gritty. I'm talking to you live as I shoot this video in the New York session. We're just past the 30-minute mark. Next charts. All right, the daily charts. These really are important to look at. On the left, look at Bitcoin. We're so far below this 96,000. This is a middle Bollinger Band. Bearish, of course. And you can see where lower Bollinger Band on this green line is 85,000. Definitely, we could go lower. In the middle is the S&P 500 micros. That's what I trade. You can see here Friday, a week ago, on the 21st, this big down displacement candle. Again, the middle line here is the Bollinger Band, 6126. We really lost the 6100s. What I'm focused on is, do we have what it takes between now and Monday to hit this 9 EMA? Currently 6080. So I've got lines drawn here on alerts. I'd want to fade that if we got into that neighborhood in the 6080s, at least for a start. But what's real interesting is we've had 4 days in a row lower Bollinger Band. Monday, Tuesday, Wednesday, Thursday. This green line down here, price has punctured it 4 days in a row. That's not happened at all in 2025, and very rarely in 2024. So ordinarily, this would be a buy signal for me, but I'm just with the, again, overall narrative is what? Seasonality. We talked about this in the previous video. Seasonality right now is meaning the biggest price displacement of the beginning of the year. We're in it right now, and that's exactly what's happening. So I tried to warn all in the previous videos, if you were paying attention, that meant basically be very cautious with buy it, hold it, and close your eyes and hope it goes up. That's not really the program here to pristine money management. On the right is the NASDAQ 100. Same script here. Bollinger Band last 3 days lower. So again, what is the dailies showing us? These are higher time frame charts, all three: Bitcoin, S&P 500, NASDAQ 100. The seasonality is impacting all of them. Next chart. All right, my favorite charts. So on the left, again, the Ranko chart with Keltner channels. Upper Keltner here, middle here, lower here. You can see it's 10:09 as I shoot this Eastern time in the morning. So we're in the first hour of trading. You can see the displacement we've had. So again, this is low resistance. Price went down here. So if I was not so conservative at the end of the month, I possibly would have scalped a long here at 59.90 just because it was so low. You can see the relative equal lows of over here prior day. 4-hour chart on the right here, same thing. I've got, instead of Keltners, I've got Bollinger Bands though. And you can see this 4-hour chart. What did we do? We pierced the lower. And so again, relative equal lows, prior day low right down here, 59.80. We went down here, not quite hitting and breaking that, but still all the more to watch. Now, what about the mid? What about the upper? So here's my alert lines on the upper. Notice the slope. We're bouncing here. Again, this is a 4-hour chart. So we're not going to close this for another 3 hours and 8 minutes. And I do see with this candle wicks, price probably wanted to do a clean out on aisle 7 and get everybody scared. So they either wear you out or scare you out. And I think this was a end of the month scare. And we could quite honestly be bullish for the rest of the session. And I'm going to watch these levels. So on the left, the high level up here is 6080. And then on the right, the 4-hour, same thing. This is almost 609 right up here on the upper. And then we've got some other levels. So you can see this hard bounce coming up right here. Again, off the 59.90s. This was absolutely a good level, but I've got rules, and my rules state if I'm up for the week, if I've already made some money for the day, and I'm up for the month, I don't need to put any more risk on right now. But I'm aware of the seasonality, and I'd rather have a better location if I'm going to fade and hold over the weekend or at least overnight. Okay, the three canaries in the coal mine. On the left, the dollar. So we're getting back here on the dollar into this fair value gap on the daily. And that is a December 18th fair value gap, consequent encroachment in the 107.45. You can see higher dollar inverse relationship to the equities. If you've got the dollar screaming higher, it's going to be very hard for the equity indexes and the stock market to go up at the same time because it's an inverse relationship. Volatility is up. Look at the last 3 days. We're in again where the navigation on location is this fair value gap from when? The whole big change on December 18th, fair value gap. So we're above right now. And if we break above it, we're in the 20s right now. So that again is seasonality. That is the hint. Volatility is high. So that's why I'm going to be fading, not going long. And then last but not least, the treasury yield. Same thing. We've got some fair value gaps that I'm looking at. Now, the yield really went down on the 10-year treasury. The yields are important right now because the government's paying so much money in debt. Consumers are paying so much money in revolving credit card debt, you name it, mortgages. If you're paying for things and you're not paying cash, this yield is something you should pay attention to. So the bottom line in concluding these three charts, everything's green today. On the last day, T+1 closeout month end for the bigs, hedge funds and mutual funds. Next chart. One thing you should know is I save always the best for last in the videos. This is the 15-minute chart. This is the overall navigation. If I'm going to take risk on in the day, I'm going to see where we're at. So note the dotted line. This is the low of the month. When did it happen? It happened Tuesday. And here we are on Thursday. And look at the high that was created before the market opened New York time, right up here, 60.71. And the high of the week is up here. Now I'll put the overlay on this. I know it's really busy, but this really helps me when I go into it. And these are all the levels on the right side that I've got label. Each line means something. Here's London open. The level that I was talking about on that February low is right down here. 5080 go all the way over here, and that is the low for the month of February. And look how close we came to it today. 59.88, 8 handles away from the low of the month. So that's important to note. That happened, and it happened in the AM session. And so that could have been the false move. And what they want to do on the books is close it higher for T plus 1 month end. This orange block right here, and I'll blow this up so we can see it. This was the London session right here. And then you can see the London sessions right here. I've got it marked out 2 AM to 5 AM. So we had a range here. Then we broke through the range. Here is the London Open at 6050, and the RTH Open for Thursday is 6053.5. And the new day open gap stacked above it, London, stacked above that is RTH Open, and above that is the 8:30 AM Eastern, the 1 hour before, which is inside all of this, the London zone. So the high of day up here, and then above that, we've got new week open gaps from February 10th and February 24th, new week open gap, the darker purple. So again, there's levels within levels here, and we're trapped with overall a consolidation pattern, and the edges are down here, what we've already talked about, which is 59.80, and above it are these purple levels, which I've got drawn out. So those are my levels. That's how I trade. I leg in a little bit at a time, and when I exit a trade, I have a target. And if it's not doing what I want to do, I'm all out. I don't leg out. I'll point out again, I'm on the June contract. Rollover for futures contracts, still a week away. But when it happens, that's going to mean other spread traders are going to be in the market that add to the volatility. But just to close, your trading is your financial sovereignty. You marked out lines, you marked specific times. That's going to be your financial sovereignty someday. Like anything on a journeyman, if you're an apprentice, if you're a plumber, if you're an electrician, if you're a mechanic, you're going to spend time learning your trade, learning your craft. It's not an overnight thing. At least it's not been for me. It's taken me years to deprogram myself from the matrix of what they call Wall Street and what they teach and what they teach others, and then to go out and trade short-term trading, whether it be intraday or a few days, to do that successfully and profitably, and then at the end of the year, document it with an audited CPA. That's something. This year is one of the best years I've ever had and the best starts, and I'm capping off a good, decent report for February. So January and February is strong, and what I want to do is have everything lined up for March. If we start off early in the week up here in these lines and we don't make it today or Friday, I'd be very interested. But 6,100 seems to be the line in the sand here. So that's all I've got. Thanks so much. Aloha. Take care.